All right. Hey, guys. Welcome back to We Talk Money. And you are officially watching this video on our new We Talk Money YouTube channel. So if you're not subscribed, make sure to hit subscribe because we're moving the full episodes from my YouTube channel, which is Chris Dunn TV, to its own dedicated for the long form podcasts. And then we're going to clip different things that are specifically relevant to our own channels. So we got Travis, which is Stock Geek TV. Then we got Nikki, who is She Talks Finance. So you'll see these clips floating around, but I know a lot of you guys said you wanted your own dedicated channel for the long form episodes. So this is what it looks like now. Just go to youtube.com/We Talk Money, and you guys will see the new channel if you're listening to this on the podcast. So the podcast isn't moving. It's just the long videos. So how you guys doing?
Great.
Week 2 in Bali.
Yeah,
Good.
loving it.
Yeah. Really enjoying the culture here and the cafe culture and the ease. Everything's so easy. It's pretty cool.
What would you say is one of the most surprising conveniences of Bali compared to the U.S.?
I love the WhatsApp culture.
Oh my God. How dare you?
Say it, but I love it. So anybody that doesn't know, in the United States, we don't really use WhatsApp.
Right.
For
Well, I
much.
guess people use it here and there for friends and family, but
Right, but
here they
like,
use it a lot more.
Every single business uses it. And like all you have to do is send a quick WhatsApp chat. You go to a website, you click their WhatsApp icon, sends them a chat, and like instantly you're talking to somebody, arranging a delivery or arranging a appointment or something. It's so easy.
Didn't you order like an extension cord through a hardware store?
I've ordered an extension cord, a bed topper. I've made appointments. I've chatted with doctors. It's like everything is
Everybody
done on
uses it.
WhatsApp, which I wanted to talk about at some point today. But yeah, that's probably what I'm finding pretty surprising and easy.
Yeah. Trav, have you noticed any conveniences or anything that you like more about Bali or Southeast Asia in general?
Oh man, there's so many things to love. It's just such a different experience than, you know, what we know in America. I love like just ripping around on scooters like it's a video game. It's a lot of fun having the wind blow through your hair and being able to get around on a scooter.
Yeah.
You know, the traffic at times, I guess, in some areas can be a real problem, just like in America. But the scooters makes it fun because you can actually like get up on the sidewalk. I don't know if you're supposed to do that, but
Everybody else does. So.
Yeah,
I think there are
I still
rules.
haven't-
Yeah.
Are there rules? Can you confirm or deny?
yeah. But man,
Yeah.
the food you can get here is incredible. You know, it's amazing. The Balinese people are some of the nicest, kindest people you'll ever meet. That
Absolutely.
sticks out to me.
It's crazy.
Yeah.
It's like it makes them. I'm not going to say that, but yes, it is definitely refreshing. The happy level, the content scale, the kindness. It's like
Yeah.
Yeah.
I like how everything is kind of close together. In America, we have like parking lot culture where like everything is so spread out and you get these massive parking lots. Here, everything's really close together and like they have one little strip for, you know, just all the little motorbikes, but everything is just so close, relatively speaking.
having a car here must be a nightmare. Nightmare.
Hey, we've seen some pretty
He's
sketchy.
confirming.
Yeah, we've seen some pretty sketchy, cars trying to fit through alleyways situations. But
Yeah.
I would much rather be on a scooter. And in fact, like the local, I guess you could call Uber of Indonesia. I guess there's technically two, like Gojek and Grab. But those to me almost seem better than Uber because you can get something. You know, they can rip by on a motorbike and pick up something quick and get it to you quick, and it's relatively easy and cheap, and it's like almost like a better version of Uber here.
Yeah.
Didn't Grab or Gojek or one or the other or both IPO?
Both, yeah. So Grab went public via SPAC. Excuse me. Grab went public via SPAC. Altimeter took it public via their SPAC. Hasn't performed super well, at least not yet. And then Gojek went public in Indonesia and on the local exchange via IPO.
Yeah.
And,
And Uber actually invested in one of them, I believe. I can't remember which one, but it was like significant. I think it was like 10%.
yeah, I want to say it was Gojek, but I'd have to double check that.
Yeah, we can look it up.
Grab could be setting up for a swing trade, just FYI.
Oh, there we go. We'll look at that in a second. But guys, for this special episode, we didn't do any Q&A last week, so we sent out a couple of tweets And even though this isn't a live stream, we wanted to do this kind of like a Q&A episode. I know a lot of you guys have been pinging us, asking us different questions about markets and travel and the economy and all that. So we've got like 20 something questions queued up. We're just going to knock them out. So should we jump into it?
Let's go.
Let's do it.
All right. So first question was from Matthew, one of our students in Korea. He said, any good ideas on businesses to start? How can I know if my idea is a winner? This is one that we could probably dedicate an entire episode to. I think maybe if we could just give like one tip on just how to start a business, like one simple thing, because again, I mean, we could talk about this for days on end. Mine would be generate cash flow as fast as fucking possible. Like, don't sit there for months or years hemming and hawing, trying to make something perfect. Build an MVP, minimum viable product, no matter if it's software, service, whatever you're doing. Try to get a sale your first week or your first month. Cash fixes most problems. And yeah, that's mine.
I mean, very similar to that, I would say, talk to your customers very quickly in any business, small or large. You need to figure out, what is your niche you're starting with? Who's your core customer? And go find out their pain points. You don't necessarily want to build every feature of the product that they're looking for, but what you want to do is figure out, how do I make that first sale quickly? How do I get my first 100 or first 1,000 customers? And too many entrepreneurs spend time trying to find this brilliant idea. They build in secret, then they launch after a year of putting time and money. And it's like, well, typically what you want to do, unless you're working on something very deep tech, is go talk to your customers quickly. Go figure out like what their real pain points are, what you can solve with the first layer solution, and then move on as you get bigger and have more revenue and profit. Then you can start to build on top of that.
Well said.
Even Facebook. I mean, look, Facebook started as a college, Facebook, and so it was only college. I mean, there's a million examples like that. Uber started with ride sharing only with black cars, right, and it eventually broadened, right. So there's so many examples, even among big companies, of how this played out.
Yeah, I don't have much to add to that, but to kind of piggyback on your point, Trav, you'd be surprised what the customer will tell you. I mean, I'm constantly polling my following and asking them, what do you want? What's your biggest issue? And trying to create products based around that. I mean, people will tell you things easily.
Yeah.
So don't be afraid to ask people questions get that.
I think that is a really underappreciated idea of like just very simply asking your customers or your potential customers what they want and then delivering a product based on that, rather than trying to be cute and come up with some like complex new thing. It's like, if you don't know if they want it or not, why build it, right? Like, respond to demand. Don't try to create a product where there might be demand there.
Yeah. As far as what kind of business, I mean, there's such a infinite world of possibilities with businesses. It's like I tend to gravitate towards the school of, well, like, what do you know? What pain points can you already see in your own life that you might be able to solve, or what areas might you be an expert in where you could go and do something? I know Gary Vee likes to say, oh, just go to garage sales and become a reseller. Like, it's like, does he really want like 1 million people to start doing reselling? That seems like a really narrow focus. Maybe that works for some people to get immediate cash flow, but no, there's something you're passionate about, something in your life that you've probably been doing where you've accumulated a couple thousand hours of experience. Like, maybe you're a software engineer. Like, what in the software world is broken that you could work on? Maybe you like to work with your hands mechanically. Like, what is there out there that doesn't exist that's a product you wish exists, right? Or that you could make better or cheaper? If it's online digital marketing, what niche within digital marketing? Is it TickTok? I mean, TickTok is coming up as an ad platform. Maybe you specialize in TickTok, right? So there's ways to find your focus, and if it aligns with like what you're good at and what you're passionate at, that tends to be like, home run material.
One thing to add, be flexible. Be flexible.
True.
Change your product if it's not working.
Yeah.
Don't get too caught up on your idea and be stuck to it if it's not working.
And TikTok's evil, so don't do TikTok.
That's right.
This is the problem. This is the problem with you. Like, TikTok you can't grow these days without TikTok. You can't do it.
I don't know if I agree with that, but
It's true.
I know the discoverability is really big and whatever. I don't like the CCP and they see
know,
everything.
it's
so
not good.
I'm not
It's
going
just
on TikTok.
the way it
TikTok be
is.
damned. All right, let's move on. All right, next question. Tornado Cash developer is held without any official charges. What's your opinion on how this could affect all blockchain projects going forward? We talked about this a little bit last week. So the developer of Tornado Cash, which is or was a mixing service where you could basically wash crypto, they've arrested him. I haven't seen any official charges. He may be implicated in like a very specific money laundering scheme, or maybe they were just like, hey, you wrote this code, we're going to arrest you. I'm going to withhold judgment until I know more. But I will say, I'm not surprised to see this. I mean, anybody that is developing tools that help people launder money, governments don't like that. That's why, even though I hold Monero, I think that's also, there's some risk there with getting delisted from exchanges and possibly more than that. So I don't know. Anything that's in this realm is obviously a major target. I did see some articles that were talking about like potential North Korea connections. I don't know, but I don't know. You guys have anything to add to that?
It reminds me a lot of the early days of music pirating and streaming, and you see over time how it really has shifted to the established players like Spotify, Apple Music, etc. Because when music piracy got big enough on Napster and LimeWire and all those services from our childhood, that's really dating me, but yeah, when those got big enough, the authorities found ways to try to shut that down. The people in power, the people that stand to lose money, the labels, the artists themselves, they had to fight back. And so I think that's kind of what we're seeing in crypto in a way. It's like as these things become a bigger threat to traditional financial systems, banks, et cetera, and threats to regulators, not having purview over that, they feel they need to fight back. We're seeing even like the SEC going after Coinbase for some, potential securities laws violations. So unfortunately, it's not too surprising. Like you said, crypto has and will continue to have a target on its back. I hope it doesn't mean there's a completely chilling effect on the entire sector and on development. I don't think we're seeing that yet, but certainly in some areas, I think we could see that.
Yeah, I agree. All right, next question. What about selling put options instead of buying stocks? Can you do it as retail? So I guess maybe we could just talk about like why you would maybe want to do that, and does retail have access to options?
Start with selling a put, what that even is. Yeah. Start with that, because a lot of people don't know.
Yeah, so a put option, if you were to buy a put option, gives you the right to sell a stock at a certain price. And if you're selling the put, you're doing the opposite. And if you're selling naked puts, essentially what that means is you're getting a credit amount that for selling that put up front. In return, you have to buy that stock at a certain level from the seller if it drops to that point or below. So like, let's say a stock is trading at $100. Let's say you sell a 90 strike out of the money put. So if you sell that put, that $90 put, it might be worth a couple bucks. You might get a couple $100 into your account. And then if that stock drops below 90, you're going to actually have to go and buy that stock. And so that puts you essentially on the hook for a liability. So you've got to be on the hook for a liability if you sell a put or sell a call naked. It's very dangerous. Now, some people will do it saying, I'm willing to own the stock at that level. Like if you're selling a put, you're saying essentially I'm willing to own it below 90 anyway. So in the scenario where it drops below 90 and I buy it, I'm happy to buy the 100 shares there. Or, if it doesn't drop below 90, then I make that income for that, that amount of time where I've written the put. So, some people use it as a way to put in, I guess you could in some ways look at it as almost like a limit buy order at a level below the current stock price. But here's the thing. If bad news comes out and that stock starts dropping very rapidly and drops well below your buy target, you may not want to own that stock anymore at that price. But guess what? You sold that put and you're on the hook for it. The other thing is there's margin requirements around selling puts. People can get into real trouble selling puts or selling calls naked. What do I mean by naked? It means you don't have an offsetting hedge or offsetting stock position. If you sell a put, you're going to have to buy that stock down at that price if it gets there. If you sell a call, same deal on the upside. You're essentially, having to sell stock at that level. So it's a dangerous strategy because it puts you on the hook for a liability. And you may initially think when you sell the put or sell the call that you're fine to meet that liability, but things could change in the interim. And so that's what's dangerous about it. Yeah.
So it's a directional play with extra complexity and extra risk.
Yeah.
Absolutely.
And most people that trade options lose their ass.
Yeah, absolutely.
Yeah.
Unless you use it for the right way, right? Like I know, you guys have used options as hedges, also directional plays, but like under what circumstance would you actually trade options instead of just spot?
I mean, if you want extra juice in the trade, for sure. If you want a little leverage, I do a lot of spread trades to try to make a directional play without paying as high of a price on the implied vol side. But yeah, I mean, option strategies can be used to do a lot of different things. You can play just volatility. You could put a position on that benefits if a stock goes beyond a certain range in either direction. So there's a lot of ways to use options, but people get themselves into trouble. I've gotten myself into trouble on certain options positions before, and yeah, I mean it's funny because like the rise of Robinhood has created a lot of retail options traders, and I know there's been a lot of blowups because of that. So
Yeah.
you just really have to be careful. Options add an element of leverage and complexity, like you said, and unless you really understand the bet you're making there, I wouldn't really dip my toe into options. I would focus on vanilla stock stuff first for the first couple of years, probably.
Yeah.
Selling a put, you're essentially trying to generate income more so than anything, right?
Yeah.
So the original question was, should I sell a put or should I buy
Instead of
stocks?
just buying stocks, yeah.
Yeah. So I mean, one is trying to generate income, and you have to be right on the timing and the price right. The other is investing, and holding to where you're not bound by that expiration date or that, price, right?
Yeah.
So very different things, very different strategies that I think it's not an apples to apples thing.
Here's something to think about when selling puts that I always think about. So let's say a stock is trading at 100, and let's say you sell a 90 strike put a month out. And you're saying, essentially when you're doing that, you're generating some income. Maybe it's a couple $100 for selling that out of the money put at a 90 strike. And in a month, if the stock doesn't go below 90, you make the couple $100 of income. Great. If the stock does drop below 90, it has a really bad news event, right? You're going to end up having to buy the stock at 90. What if the stock went to 75 or 80, right? By the end of the month, the stock is at 75 or 80. You're now on the hook for buying it at 90. So you're in an immediate loss position. That's in the downside scenario. But let's talk about the upside scenario where the put expired worthless. The stock stayed at 100. You sold the 90 put. You made a couple $100 of income. Well, what happens if that stock goes up to 110, 120? Did you really want to just earn a little bit of income on selling that put, or would you have been better off buying the stock at 100 and riding it up to 120?
Right.
That's always something to think about. Now, if you think the stock is going to stay flat, then maybe selling the puts, and then every month after that, you can keep selling and earning income month after month. That can work, but that's probably best in a situation where, you're not better off buying the stock where the stock stays flattish or choppy.
Yeah.
Yeah.
And so it's a very specific scenario that you're really wanting there. You don't want it to go down too much. You don't want it to go up too much. You want it to kind of stay in a range, and you benefit from selling that put. You're selling volatility. So
Wouldn't you have to be short selling the call or selling the put to kind of hedge against that risk?
yeah,
That downside risk?
yeah. Oh, you're saying so like short the stock?
Yeah, to kind of hedge against that risk of the stock going down a lot, but then at that point it's like,
Yeah, essentially you can transform a stock plus a put or a stock plus a call position into a completely different position. So with the short put and the short stock, let's see. So that would put,
Okay, I'm going to stop us here. Let's not get too much in the weeds with this stuff.
Okay.
As you guys can see, options are complex as hell. I mean, there's so many different ways you can trade this stuff, so many complexities. I can just feel people's brains going, what?
yeah, that's fair. That's fair.
Okay.
That is fair.
We'll do
Yeah.
like a separate whole masterclass or something
well, I've
just
been
on
asking
options.
him to
but-
do an options course.
Yeah. Okay. Moving on. Where have you guys been investing in land? Okay, let's do this. More so than just doxing where I've been buying, why don't we talk about, I guess, our thesis on land and maybe like migration? I have pretty strong thoughts about this. And maybe it could be more helpful to talk about like the criteria of like what we're actually looking for with land. So personally, what I'm looking for is stuff that is drought resistant. So right now in the US, I mean, it's like every other day we're seeing headlines of fires and droughts and lacks of water for neighborhoods out on the west coast of the US, everywhere from California, obviously in the desert, and creeping, into Texas and stuff, right? So for me, I'm like, okay, well, where does a lot of rain consistently happen? and where would things be more drought resistant. Also, I don't want to be in a city, but I want to be within a couple hours of a major airport. Those are kind of the things that I'm thinking about, is as mass migration happens away from the problem areas, where are people going to go to? So I don't know, maybe you guys could look at a map and try to figure out some areas that look promising. I don't know.
That's a cliffhanger.
I mean, I think I guess it very much depends on whether you're looking for the highest appreciation in the next decade or two, or like somewhere where you plan to have security and safety and a long-term, property or home.
Yeah.
Because if you're looking for appreciation, I think the thing to focus on is, where is the fastest population growth going to be relative to the supply of homes? I mean, that's essentially what it comes down to. There's obviously other factors, but when I bought a place in Austin a decade ago, that was really one of the prime concerns was, okay, I want a place to live in a city I love. That's number one. But also number two, if I do want the investment to work out over time, I want it to be in an area or neighborhood where I know that there's a lot of positive developments happening. Not a ton of new supply could be brought on. And so there's, kind of a mismatch of like, there's more people that want to be in that neighborhood than there's going to be available supply. And I know that sounds like very basic, but a lot of people I don't think of it like that.
Yeah.
A lot of people think of it like, oh, I'm just going to go into whatever nice neighborhood has a good school, and that may be the right decision for them if they have kids, right? But if you're looking for pure appreciation, you want to think about what are the areas that are going to see, the highest amount of demand relative to existing supply.
Yeah, well said. And I think there is a big difference between buying something that you're going to personally live in and investing in land as a store of value.
Yeah.
Right. Where maybe it beats inflation, maybe it doesn't. But, I think you can't really create more land unless you live in like Dubai and they have a big machine that creates islands out of sand.
Yeah.
But I don't necessarily think I want to live in a desert. So, go where there's a lot of rainfall, where there's fresh water, and I keep it simple.
Well, Florida fits a lot of that criteria, and it is growing tremendously.
Yeah.
Did you know that Tampa was like one of the fastest growing cities?
Yeah.
Recently?
I guess the problem there is you can't really buy big tracts of land anymore.
I'm
lot
sure
of that is
I'm
being-
sure it's spreading somewhere.
Yeah. And I don't want to be in a hellscape U.S. suburb either, with cookie cutter houses that are inches apart from each other. Like that, I don't know. That to me is not investing in land. That's like buying a shit box.
Gotcha.
No offense.
Well, there's also, you bring up a good point about land. If we're kind of removing the structure part of it, if we're talking about pure land, there's a lot of ways to invest in land for like agricultural use, or maybe it's mineral rights. And there's a whole interesting subset of brokers and people that deal in those spaces. And I think it's an area that probably not a lot of people, especially urban dwellers, are exposed to. An interesting place to think about. There's a few ETFs in the publicly traded markets now that do that buy agricultural land where they're growing fruits or veggies or whatever, and they're pretty interesting. Some of them have done pretty well over the last few years.
Next question. The Grand Duke was asking, which investments do well in recessionary environments? So I think we've actually talked about this quite a bit over the past year. What does well in a recession?
The data shows
staples?
Not a lot. Yeah, consumer staples, dollar stores. In some recessions, some commodities will work depending on the supply demand balances there. But yeah, for the most part, it's interesting too, right? Like 2000 to 2002 .com bust, real estate actually started performing decently well coming out of that, on the tail end of that, right? So it's just weird now because everything's so tied together, so correlated via interest rates, that like you would expect real estate to be down, stocks to be down, even bonds to be down in a severe recession today. So we probably have even fewer places to look for things that are going to perform in a really deep recession. Hedges, shorts, maybe CTA stuff like.
That's my best performing asset this year so far. I'm up over 40% in my managed futures accounts, which, we've talked about this before, but I always get questions like, what does that even mean? Well, you're investing in a fund that goes long, short, all the futures markets. And so when there's volatility, when there's pullbacks, they actually have like inverse correlation. Like when the stock market's going up, they typically are flat or not doing that well. But when there's big crashes, they're crushing it. So that's why I've done so well in those futures accounts where everything else is just kind of down. Those can actually take advantage of the volatility.
Yeah. Yeah, unfortunately, it seems like crypto hasn't really been, from what we've seen so far in the market drawdowns, that it hasn't been a great hedge yet. Maybe it's too big now. Maybe the asset class is already too deep for it to be a great hedge. But we haven't really seen it go through a full deep recessionary cycle either. So I guess maybe COVID.
Yeah.
But that was such a weird one. It's hard to.
That was very
draw
short-lived,
conclusions.
and then the Fed pumped trillions in, and people used some of that money to buy crypto. So yeah, it's still yet to be seen how Bitcoin's going to perform in a true recession, since it was born right at the bottom of the '08 recession. So
Yeah.
all right, next question. Why do you guys like Bali, or why did you choose Bali? Are you renting or buying? This is actually kind of an interesting topic because we're meeting with a property manager today. I think Bali's interesting because it has a massive like digital nomad community. Buying here is a little bit different. Typically what people do is what's called long-term leaseholds, where you will essentially rent a piece of land for like 30 years from a landowner, build a house, live there, and then either renegotiate at the end of that term or essentially hand the house over to the landowner. Right now we're just doing short-term rentals, but we are interested in securing something more long-term. What about you, Nikki? Why do you like Bali? Since this is your first time, well,
Yeah,
let's ask, do you even like it here? And would you want to spend more time here?
So yeah, this is my first time. I probably wouldn't have chose Bali, but you know had been here and experienced it. So I like Bali. I think that it's interesting how there's a lot of Western comforts. Like I didn't expect that. I've traveled the world. I've been to India. I've been to Vietnam, Thailand, all kinds of different places. And Bali blew my mind when I got here, seeing like the Canggu area.
Yeah.
I was like, what is this place? It's like if downtown Austin, was in an emerging market, like this would be it. It's just such a mind screw. It was a mind screw for me because you have these beautiful cafes that you would find in the United States, in the best cities, in Bali here. So it was really cool to see that, and I could definitely see myself vibing with that.
Cool.
I guess I do enjoy the Western comforts. I hate to say it, but I do.
I had a feeling you would like that. I mean, it is cool because you get a mix of like authentic culture along with.
That's
some
what
of the
I
comforts of
mean.
them.
You've got like these Western cafes, and then you have these authentic, Hindu temples.
Yeah.
And you see the offerings, and it's just the culture. You've got the culture along with the comforts. So that is what I think is really neat and unique about it.
Yeah.
Yeah. I mean, I first came here in 2019 and fell in love with the place. And, I hope that we don't spoil it because I bet we by like the greater like global world because, it's not a huge place. It's an island. It's in the tropics and it has a very authentic local culture and it became very popular. Like it rose to the top of Nomad list a couple years back as a place for digital nomads. And clearly you can see that influence of people coming from all over the world. It's become very busy. Like even now, post-pandemic, it's as busy as I remember it ever. So it's still very busy and very lively. Which is fun, but it's also like it can be sometimes overwhelming with how busy certain areas get.
Yeah.
And so I hope that it stays true to its roots and it stays pure because it is a magical place. It's beautiful. The sunsets, the beaches, they're beautiful. The people are amazing. Like I said, the Balinese people are just absolutely some of my favorite people. I could see myself spending probably part of the year here, part of the year, back elsewhere. I've been kind of trying to feel out different places this summer as places I could spend more extended time outside the U.S. Like we went to Portugal for a couple of weeks in June, kind of trying to feel out there. Portugal's become another big hub for digital nomads.
What did you think of that? Would you spend more time there, or was it overwhelming, underwhelming, or kind of what you expected?
I liked it a lot. I went to a bunch of different areas like Porto and Lisbon, Cascais, and down south in the Algarve region. Some of that was obviously vacation related, but I was a little surprised at how it's risen to the top of Nomad list because I didn't actually find that. I didn't find it that easy to just slide into getting work done. I didn't see as many available like co-working spaces or cafes. I think that definitely exists in Lisbon. But outside of that, I was a little surprised I didn't see more of that, given how hot it's been as a digital nomad hub lately. So I found it a little more difficult than I expected to like be like a digital nomad there. But I love the place. I think the culture is amazing. The weather's incredible. It's kind of like the California of Europe in some ways.
Oh, cool.
But yeah, I mean, I think, there's no perfect place in the world is kind of my conclusion. You're going to have trade-offs even in Bali. Like, we got our American stomachs aren't necessarily suited to some of the
Little
stuff.
Bali belly, every now and then.
The noise sometimes can be a lot.
Yeah.
Roosters crowing outside. But
So, do you prefer this weather over an Austin summer?
oh yeah. Yeah, it's humid here, but it's less hot. Like Austin is getting up to 105 degrees Fahrenheit in June and July, and August it can be even worse. It's like you can't really be outside doing things.
Are
The,
you
the only
looking-
way we enjoyed the summers in Austin is because we had
a
the boat,
boat, yeah.
and we put hundreds of hours on that every year. Like,
Yeah.
Are you looking to leave the summers in Austin?
I mean, that would be pretty nice.
Ideal,
Yeah, at least
yeah.
part of it.
Yeah.
Because it just gets brutal.
all right, next question. At what threshold would you leave your 9-to-5 job for full-time investing? Would you do it at 6, 7, or 8 figures? This is a good question. I think it depends. Well, it absolutely depends on your personal situation, but I always say it's good to have non-market correlated income, meaning like even if you do have tens of millions of dollars in your account, I think it's good to have a source of income that isn't tied to the markets. And especially if you're trying to grow like a smaller net worth, to try to live on that and draw it down at the same time that you're building it. It's kind of like working against compounding. So I don't know. I think there's maybe a couple situations where it does make sense to leave your job for being a full-time trader and investor. Number one, where your passive portfolio pays way more than your monthly or annual living expenses. Or number two, if you like manage a fund and you get fees or something that is like basically guaranteed income, not tied directly to monthly performance, right? Like hedge funds, 2 and 20, like you make a lot more money if you perform, but if you get, a couple percentage points of AUM, assets under management every year, that creates steady income, right? So there's a few situations where it's kind of like investing is your full-time job, but I just see so many people want to quit right away and be like, I'm going to day trade full-time. It's like, yeah, day trading used to be a profession, but the markets have changed and now not a lot of people can do that, or they're just trading all day, every day, making a living doing it. So I think it makes sense for some people to do it, but the majority of people, I think it's actually better to have a second source of income. What do you guys think?
I mean, looking at the math, I think it would be very hard to have 6 figures and be able to do investing full time while also trying to like draw down on that. Like you said, you're offsetting. I mean, I don't know how that math works. Like, unless you're in an extremely low cost area or something, 6 figures probably wouldn't be enough to quit your other full time job and become a full time investor. In most cases, I would say, just thinking through the math on it. 7 figures, low 7 figures, I think would still be difficult. Maybe as you get into the mid 7 figures, 5 million plus, it starts to make a lot more sense. Maybe even like 3 million plus, depending again on your expense base. Do you have kids? Do you not? Do you live in a low cost area? Is your home paid off? Those kinds of things. A lot of factors to take into account. The other thing is obviously passion. Like, what are you good at? Like, yeah, I mean, like my brother, for instance, is a software engineer. And last year, when the market was ripping, he's like, I don't know. I've been thinking about like, maybe I should like, somehow try to work in investing or do more like investing. Like it sounded like, I don't know if how serious he was about it, but it sounded like he was considering trying to do like investing more full time. And I'm like, no. And then of course this year now that the market's down a lot, it's like, he's very much enjoying the benefits of his software job, the confident software job, and he enjoys the work too. He's good at it. So he can do the investing stuff on the side more and more as he gets older. He doesn't have to give up his software engineering job. I think that's the right call for him. But yeah, so like if you have a true passion, like I just wake up every day thinking about trades and markets, and it's one of the things that I just truly absolutely love doing regardless of the money. So for me, it also makes sense to make it a big part of my profession. But
yeah. I mean, I don't have a whole lot to add to that, but I think that like you said, there are so many factors. I guess the way that I like to think about it is I like to have like my amount of money that I know is invested for like my future self. And then once I have that in working and I know I'm not going to touch it, it's like then excess money can be used as like capital for trading and investing and trying to make an income out of it. But that's just kind of how I think about it.
Yeah.
I think a lot of people get excited about the fact of quitting their jobs and trading and investing full time, but it's not always easy. And, you have to have the patience when the markets are doing shit like it's doing now, right? Like, this is not the best environment for trading yet. It's been yes, we've had the meme stocks go off, but generally speaking, it's been a tough market environment for both trading and investing. And like, what are you going to do when those times come? So that's why I like to have my capital that I know is like invested passively for the long run. I'm good. I have my quote unquote fire number or whatever you want to call it. And then anything above that, I'm taking and utilizing it for trading capital.
It would be nice if like you could treat the markets as a job where you have like a predictable, return on a daily basis, but that's just not how the markets work, right? We have really great years. We have bad years. I've had some years where I've made more in a year than I made in the prior 10 years, right? And I've had other years where I've lost money. So it's a very inconsistent thing. And so when you look at trading, active trading, you're going to have massive years and you're going to have a lot of profits that are grouped together. Then you're going to have dry spells. You're going to have dry market environments where there's just not much opportunity. But so that's active. On the passive side, I'm doing the math here. If you look at, what a lot of people do in their passive portfolios is they think about, well, what's my safe withdrawal rate? And historically, that's been 4%. I think with lower interest rates, if you lower that to 2 or 3% to be conservative, that might make sense. So for every $1 million you have in a passive portfolio at 3%, you could withdraw $30,000 a year. All right. So look at your current lifestyle and say, to sustain that, do I spend 30, 60, 90, 120? Like what is my average annual burn? And then you can back out the math. That's why I think 5 million in the bank is nice, because you have 6 figures that you can draw down and not have to really worry, right? You could live a pretty damn good lifestyle anywhere in the world with 5 million in a passive portfolio. Some people are going, wow, that's way more than I think I could ever make. Other people are like, that's peanuts. But I think that's maybe a good benchmark or a good goal for a lot of people. Anything less than that, if you have less than $1 million and you're drawing that down during a recession, that account, your $500,000 could go to 250, and then you're really freaking out, right?
Yeah, I think what people need to remember is you have to annualize things, right? You can't just look at one given year and just see what's happening there. You have to remember this is lumpy. You have to average it out over time. And that's where people get lost on this stuff, because they get caught up in the losses in 2022 and, oh shit, I'm not making money. But you have to think long term, average out over time.
Yeah. Awesome. All right. Next question. Top 10 books about investing that you would recommend. I know, Trav, you did a whole video on your channel talking about those. Why don't we just do one or two real quickly, and then we got a ton of questions to go through.
I mean, there's some great ones out there. It's hard to pick like one or two, but let me think about this for a second. I did the video. I probably need to do a refresh. I really like one of the old classics, like One Up on Wall Street by Peter Lynch, because I think it's one of the more accessible books about stock investing, particularly, and it explains some of the core concepts like valuation and PE multiples and things like that. But it also speaks to like a retail investor and talks about finding ideas in places and things like that. So I think it's a really accessible, good one. I really like 100 Baggers by Chris Mayer, which is like a newer book. Again, these are all stock investing focused, but that one I think goes through a lot of great case studies of some of the best performing stocks over the last 50 to 100 years, and what were those common characteristics among them. So I've spent a lot of time rereading through that one, and I like both of those. I like Market Wizards, the interviews with traders, is a really good way to get like a broad exposure to different types of investing. You're like, whoa, like. you read like 12 different interviews from different professional investors, and you're like, this goes way deeper than I ever imagined when I first started looking at investing. I think that's another cool one.
Awesome. Nick?
We can move on to the next question, though. I mean, he's
okay, well,
like,
I have
he's
two
the
that
book pro.
Well, I have
okay,
two that I
love the
always recommend.
Okay,
Trading in the Zone.
that's the one I was going to
by
say.
Mark Douglas, and then The Mental Game of Trading by Jared Tendler. If you haven't read those, what are you doing? Stop trading and read those damn books, because that will give you the foundation of the mental side, which a lot of people ignore because it's not sexy, but it's the most important. So Trading in the Zone, Mark Douglas, and The Mental Game of Trading. The old book was The Mental Game of Poker, and then Jared wrote a new one for The Mental Game of Trading. So read those.
I want to do a video at some point of overrated investing books, because there's also...
Here, I'll give you the category. You know what it is. Anything talking about strategy. Any book that's written on strategy or Wyckoff patterns or anything like that, you're not going to find an edge in those books. You might learn something. It'll make you feel smart, but it's not going to necessarily make you a profitable trader.
I have a controversial one.
Oh,
okay.
What?
Principles by Ray Dalio.
Ooh.
Here we go.
I think it's way overrated. Oh, I also have a second overrated one, which is The Intelligent Investor by Ben Graham. That makes me a heretic or heretic.
Okay, give a one sentence reason about Principles and the other one.
When I listen to Ray Dalio speak, I just don't find any insights there. Maybe I would have if I was like 18 and new to investing.
Yeah.
He speaks very generally about the global economy and about like these principles that he used to start Bridgewater, the hedge fund. I don't think you could actually read that book and take anything specific away to go start your own hedge fund. Maybe it would give you some interesting things to think about. Like it sort of reminds me of like management books in business. It's like, well, you could use this general principle of challenge everyone at the meeting table, challenge investment ideas. What does that mean, challenge investment ideas? How do you translate that into investment process, right? So I found Principles and a lot of, frankly, what Ray Dalio says out in public to be just not that useful to me.
What do you think about his idea of like rising and falling empires and the idea that the U.S. is peaking out and China's rising?
So I don't think that's actionable. I don't think that actually gives you any actionable investment ideas or strategy in the near term. These long cycle 300-year patterns are just not useful to investing day to day, year to year. So like that's another area where I think like he has some really smart things to say about, the rise of China or, the slow decline of the US. Does that help you make money in the next 2 years, 5 years, 10 years? I don't think so.
Right. Because you never hear him talk about the risks of China, and he's been asked on TV about like CCP's actions, and you can tell he is walking that line because he doesn't want to piss China off for some reason.
I think it's kind of a weak move.
Yeah, he's like
a fan.
Yeah, he's got investments in China. I'm pretty sure there's probably some Chinese pension money in Bridgewater. If I had to guess, I don't know that for sure. I'd have to look, but also it's interesting because Bridgewater as a hedge fund has done pretty well over the last few decades. Certainly one of the better, large hedge funds. They have so many assets that they're not putting up 30-40% numbers like Jim Simons, but they put up 10-15% a year for a long time. And I used to read when I was in hedge fund world, I used to read their daily Bridgewater Daily Observations was their daily newsletter, and it had a lot of really interesting economic data and near-term insights. But I guess it probably wasn't written by Ray himself, or maybe only parts of it were written by Ray. The rest was written by market strategists working at Bridgewater. So there's a lot of really smart people that work at Bridgewater. I'm just like, I don't know. Every time I hear Ray speak, I'm like, I don't know how to translate this into anything specific related to my investing skill set.
Interesting.
So I don't know. Maybe Maybe that puts me in the category of
hater. Why are you a hater, man? No, I think it makes sense. I mean, there's people that talk in terms of like broad concepts, and then it's like, well, how can I use this in my day to day? That makes sense.
Yeah.
All right. On that kind of similar topic, what are the top 10 countries to invest outside of the U.S. for like the next 10 to 20 years? A lot of people have eyes on China.
And India.
I don't know. I just think that it's way too risky to invest in China with the way that the CCP is. I mean, the shit that they've done over the past couple of years with going after private companies and, making Jack Ma disappear. And like, I just don't trust that. So maybe China aside, what are some areas that you guys are bullish on over the next decade or two?
I guess Indonesia.
There we go. Yeah. Rising middle classes.
Yeah. I mean, probably. Brazil?
Yeah, Latin America is so tough, right? Because demographically, it's similar to Southeast Asia, where you have better demographics in a lot of those countries, but then you have a lot of political risk there. As we've seen with Argentina, Brazil over time, they have even Chile, right? They have these elections that swing dramatically from like right to hard left to socialist governments, and then socialist governments start to put in these crazy social programs, or they nationalize industries like mining or energy, and turn the country into a mess. Mexico, though, is kind of an interesting one.
Mexico is interesting.
But talking about political risk, my God.
Another one with political risk, though. You're right.
Yeah.
Isn't that kind of like everywhere?
Well, I don't know. Thailand just legalized weed, so that's kind of a huge step. I mean, they went from literally making it like something very, very scary to, hey, you know what? We're going to release all marijuana prisoners or people that have been arrested for weed, and we're going to make it completely legal. And it's just wild to see such a 180. So I'm bullish on Thailand.
Yeah.
Good for you. Yeah, that's good. Yeah.
I mean, Southeast Asia and Latin America are places to definitely do more digging, I think, for sure. It's just, you've got to be able to get your arms around the local geopolitical risk, and it's tough too, because a lot of the best companies aren't always public. Like the public markets are not as developed in some of those countries as they are in the U.S. Like we have 4,000 public companies, small to large in the U.S., whereas in a lot of those countries, like Brazil, for instance, you only see like very large companies that are public for the most part.
Yeah.
So
what about like South Africa? I know we knew a guy that had a fund that he was investing down there. I haven't talked to him in a while. What do you think of anywhere in Africa, or specifically South Africa?
I mean, Africa is an area that a lot of people are very bullish on as well. I mean, demographically, a phenomenal demographic setup. Again, so a lot of geopolitical issues. South Africa being a prime example, where you've had some serious, reparations, like the whole look, I don't want to get into the politics of it, but it's really upset the balance of power and economics in the country over the last few years. You probably know more about it than I do, to be honest. I haven't spent that much time.
My question is, the countries like, Indonesia, more so Bali specifically, and Thailand that are opening to Westerners, I feel like they're going to do the best, because you look at Bali and you look at all these businesses, and even like the studio we're in, this is creating jobs for people.
Yeah.
And I don't know, there's got to be something
the fact
to that.
They're now competing, like Thailand and I believe Bali and a few other Southeast Asian countries are trying to launch like more types of visas to attract both wealthy investors and digital nomads. So with the work from home movement in the US and a lot of tech sticking, and I just read that Apple's having a big revolt where people don't want to go back to the Apple offices, I think people are going to continue to flock to places like this. So yeah,
I think it's key for them to open up more visas and more ownership ability, because like countries like India, Indonesia, even China to a large degree don't allow foreign direct investment in like things like equity in companies, or even in property in many cases. Like you were saying earlier, like for instance, you can do a long-term lease here, but you can't actually own property or own the land, which we could debate the merits of that. I think there's some positives to that, but it does keep foreign investment out to some degree.
Thailand's making a big change where they're allowing foreigners to own, I believe, up to like a half acre of land. Where in Thailand before, you could only buy a condo. You could own the box, but not the land. Now I believe they're actually making it more viable to actually own land in Thailand. So yeah, I think investment and migration to Southeast Asia is only going to heat up.
Yeah. Probably right. I mean, the Indonesian stock market is one of the better performing Asian stock markets so far year to date.
Really?
Yeah.
Nice. All right. Next question. Damn, the coffee here is so good. Are you going to buy a CryptoPunk? No. Hell no. Listen.
What are they at now? How down are they?
They're down. I'm not a hater of NFTs, but I'm certainly not yeeting six figures into these things, right? Like, look, let's just take a look where we're at.
Do they have a CryptoPunk price chart?
Yeah. So I'm looking at NFTpricefloor.com, and you can go back and basically get an idea of the price chart and get an idea of where these things have been and where they're at and how much they're down. listen, I want to buy things with utility, and I just don't like JPEGs. You know, call me a hater or whatever. I don't care. I'm just not a JPEG.
You're a
fan.
hater.
I'm a haterade.
You're the worst crypto person ever.
I know. What amount can be cold fuck money? I think this is
What?
I think this is like fuck you money. Why don't we ask?
Oh, F you money.
Maybe, yeah. I think
Okay.
that's what they're asking. I think 5 million is a good number. Throw out a number.
Too many variables.
I know.
I'm
So
sorry.
throw out a number for the average person. I think 5 million because safe withdrawal rate. You know,
For the average person,
Yeah.
probably 2 million.
okay.
Maybe even
You say
1.
2. Trav, what's yours?
For the average person.
The average U.S. citizen?
Yeah. Maybe 2. 2
I
for
would
me.
say probably somewhere in that 3 to 5 range
Yeah.
is like a minimum.
I'm gonna overshoot, right? Because I think to have a comfortable lifestyle and to be able to, like, again, say you have a 50% drawdown in a recession, you go from 5 to 2.5. That is less painful than going from 2 to 1, right? So I don't know.
fair enough.
Try to go for the bigger numbers, y'all.
Well, always. I mean, duh.
I saw like some Instagram ad where it's like how to retire on 500 grand. I'm like, you can't fucking do it comfortably.
It's tough. It's tough.
Like,
And-
do you want to eat ramen and sleep in a hostel? Like,
That's why, like, but for the average American, 500 grand is a lot of freaking money. And that's very difficult to achieve throughout their lives, right? But,
I don't think so.
well,
I don't know.
I guess it depends on what your definition of average American is.
Yeah.
Someone that's like working a corporate job, making 50, 60 grand a year, you know, like trying to pay the bills. That's what I mean by that.
That's why we're trying to help people not be.
Right. Think outside the box.
Yes.
Think above average.
Okay. Next question. Why do people trade futures instead of the spot markets in crypto? What are the pros and cons? Well, people trade futures for leverage, right? Like Travis was talking about earlier, extra juice on the trade. People want to get rich quick, but almost all futures traders lose money. I'm going to say that again. Almost all futures traders lose money. Now, people that use futures for a hedge or long-term swings, maybe a little bit of a different situation there, but people that go on BitMEX or whatever the latest shit exchange is and try to actively day trade futures, almost all of them lose money. Pros and cons. Cons, you're going to lose money. Pros, you get extra juice. Spot markets, way more safe, but you're not going to get as big of returns if you're on the right side of the trade. Anything to add to that?
I mean, we go real deep into position sizing and like the Kelly formula and things like that in the stock boot camp. And, you know, if you just look at the pure math of things and look at like variance and volatility, like you just can't run 50 times leverage on pretty much any asset. Like there's almost no asset in the world you could run 50 times leverage on and not blow up at some point.
Yeah.
Even 20 times leverage, 10 times leverage is pretty insane. Yeah, maybe you can snipe a trade here or there, but you do that long enough at 10x leverage, you're almost certainly going to blow up. Like the probability that you blow up is like, 98, 99%.
Yep. Is it real and safe to live on stock dividends?
Is it real? Yeah, people do it, but you got to have a big capital base.
Yeah, because what's the average dividend yield usually in a dividend portfolio?
Probably right now.
I think the S&P is yielding about 2% on dividend yield.
You could
across the
probably get
index.
3% if you get some sketch stuff in there.
Yeah.
You know, like
You could push that. Yeah, you could push that to 4 or 5% if you were really taking principal risk. Yeah.
Yeah.
So that's the thing, right? Like how much principal risk do you want? How much volatility do you want? So is it real? Yeah, you can get dividends, but is it safe? I don't know. I think that's, again, where that safe withdrawal rate comes in, no matter if it's coming from appreciation or dividend yield, like keep it 2-3% maybe in today's market.
Yeah.
You always have to ask yourself, if something is giving a higher yield than everything else out there, what is the catch, right? Whether that is a
Yield farming?
Yeah, whether that's DeFi, whether that's a stocks dividend yield, whether that's a bond. Why is this thing giving me, 5 to 10% when every other safe asset out there in the world is yielding, 3% or below? You have to ask yourself that question. What is the catch? What's the risk that I'm taking by getting this 10% yield or whatever the number is, right?
There is no risk-free yield. A lot of crypto
yeah.
people learned that in the last year.
I guess one of the good things is like treasuries are actually not too terrible right now. You could lock in
3%?
3% for
3.2 maybe?
And For some
Yeehaw.
people, that's yeah. But I mean, for some people, that's
For
like
a part of the portfolio.
part of your portfolio. Yeah.
If you believe inflation's coming down dramatically, then 3.2 might work. But if inflation sticks at 6, 7,
And they keep raising rates, then yeah.
Yeah.
But like,
Yeah.
how much higher can they really go without breaking shit? That's the big question. I don't think that much higher, but we'll see.
yeah.
Do you guys use OTC desks, and what are their pros and cons? So OTC means over the counter, which basically means like private trades where you're not pressing buy and sell on an exchange website or through an app. I personally don't use them in crypto. Trav, in the hedge fund world, did you guys use OTC desks, and why?
Yeah, you use a lot of OTC. I mean, an OTC desk is like Goldman Sachs or Morgan Stanley's typically on the other side of your trade. That they're the OTC. Second party, and typically, they're actually more of like a middleman. So what they're going to do is they're going to go do all the work to try to find the other side of the trade for you, and they'll take their cut. But yeah, in options trades, where you need a lot of liquidity, where there just isn't much liquidity available on the day-to-day exchange, or particularly in options, like I said. In areas like interest rate derivatives, for instance, let's say you want to put on a big interest rate trade. Let's say you want to speculate that interest rate's going to come down to 1% in the next 2 years, right? To do that in a big way, you might go to the Goldman Sachs, interest rate derivatives desk, and then you're going to do an OTC trade, and you'll discuss that with them, the parameters of the trade, the amount of the trade. Some of those things require like an ISDA or like a specific agreement that's hard to get unless you have like $1 billion of assets or more. Actually, in the Big Short movie, they talk about that. Some of the subprime shorts that were put on by like Michael Burry and guys like that, they had to do those via OTC trades with the banks. And basically you go and you have an agreement, and you maybe talks through some of the parameters on the phone, and then you confirm, and that's how the trade gets done. I know in the crypto world too, I've heard of like, if you've got to move $25 million of Bitcoin, in half a day, you might do an OTC or something like that.
Yeah, it's mostly for large block trades. I'm not making $25 million single trades.
Yeah.
If I'm doing larger size, I'm typically scaling in, and I trade on liquid exchanges where my size is never an issue. That's why I always say, like, don't trade microcap shitcoins, especially if you have size, because you're going to get stuck in the trade. And you just don't want to be in illiquid exchanges or illiquid markets. And if you're slinging hundreds of millions of dollars, it probably makes sense to do some OTC stuff or just scale in over the course of a few days.
I thought y'all were talking
Yeah.
about penny stocks originally when I heard OTC.
Yeah.
Oh yeah, penny stocks are also another version of OTC trades, because
Yeah.
there's certain stuff, if it gets delisted from an exchange, you can only buy it OTC.
ADRs or OTC.
Yeah. Weirdly enough, on the stock side, OTC doesn't necessarily mean you can't just buy it with a click of a button through your online broker.
Right.
True.
But it's passing through a bunch of like intermediaries that aren't like an exchange like the NASDAQ or the NYSE.
Right.
We had an interesting OTC trade presented to us a couple of years back, the Mt. Gox Bitcoins.
Yeah.
We had a look at that because a broker friend of ours had called us and said, hey, we've got a chunk of the Mt. Gox claims on this Bitcoin, and we're essentially trying to find a buyer for them at, I think it was 50 or 60 cents on the dollar at whatever Bitcoin was trading at the time. And in retrospect, probably would have been a good trade. But I think isn't that just about to get paid out now, finally, the Mt. Gox claims?
We'll see.
Yeah.
The lawyers have been sucking up as much as they can.
Oh, yeah.
That's for sure.
Yep.
All right, next question. How to trade a choppy market?
You don't.
Well, I guess there's a few strategies
just
where
kidding.
you could, but I
Yes.
agree.
Yeah.
For most part, you try to stay away from choppy ass markets, and you only trade markets that are trading with conviction and direction.
You're more so kind of like having to be just more short term trading a choppy market. You have to be more precise with your exits and entries, and you can't stay too long.
Like Blue Apron?
Yeah, yeah. Like yesterday, I probably should have scaled some out, but we'll see what happens with that. But
Yeah.
but generally speaking, yes, you have to be more careful.
This is where, if you have a sideways choppy market, you could do some option strategies. But
Yes.
yeah, I don't know. I made enough money in directional markets that I don't have to really be bored and sit there fighting choppy markets.
Yeah, sometimes it's just not worth it.
Yeah.
Yeah.
It's like fighting for peanuts. Why overshoot your ammo at squirrels when you can be patient and get the big buck?
That's probably, that's probably my biggest thing is like you have to be quicker to take profit.
Yep.
We're not in 2020 anymore.
Yeah, I mean, BBBY, over the last 2 weeks, I mean, look at that roller
You
coaster.
had to get in, get out.
Yep.
Yeah.
All right. Share with us which crypto you are invested in other than BTC or ETH, right? This is like the most common question is what are your top cryptos that you hold or that you know, I've said this 1,000 times. I'll say it again. I trade altcoins to accumulate more Bitcoin and fiat that I can then in turn use in my investing machine to invest in other stuff. So this question is whatever the answer is today is going to be different tomorrow, probably.
Do you have any altcoin trades on right now?
Yeah. And as far as like long-term holds, I only have a handful that I have in cold storage. I have some Monero, I have some ETH, I have some Bitcoin, and I have small positions in a handful of others. But the majority, the bulk of my portfolio right now is fiat and Bitcoin. I have a lot of cash right now, and I have quite a bit in cold storage. I don't have any major positions on right now. Just waiting for this deflationary environment to kind of chill. You know, we're either going into accumulation right now or we're going to see deeper prices. I'm waiting for evidence of one or the other to be true before I do anything. So I've got ammo ready to go on dip buys, but I'm just not aggressive right now.
Yeah. Same thing in stocks.
Yeah.
Yeah. How do you feel the merge is going to affect ETH? Will everyone accept the fork or will it split into another chain? Yeah, look, I don't get caught up in these kind of like political infighting debates in crypto. I don't really have a strong opinion either way. I'm kind of an outside observer. Have you guys followed the ETH merge or have any
You'd have
opinions
to
on that?
explain like I'm 5 all of that to me because it's like I can't keep up
Yeah, it's
with
going
it all.
from proof of work to proof of stake.
Okay, I remember that.
Yeah. And look, I know there's some people that say that's a really smart idea. There's some people that say it's a really bad idea. I'm not technical or smart enough to really make a determination there. I'm like, all right, we'll see what happens. I look at it just like I look at any other tech investment I have. I say, okay, cool. You guys are doing that. Let's see what works.
Is there a minimum you have to keep the money staked? Is
On
there a
the-
minimum amount of years or something, or how does that work?
For what? To buy? Or
No, like if you are giving, because you have to put your Ethereum into, like when you stake it, you
Why don't we do
lock
this?
it
We'll
away.
do a separate masterclass
Yeah,
on
someone
proof of work
needs
and
to,
proof of
like,
stake. We're not getting in the weeds
Yeah,
on
I
this
need
show.
a whole thing.
Yeah. Okay, we'll do that. We'll do that in the community. All right, cool. Next question. Hey, Chris, can you guys give your input in the housing market? Do you think prices are going to come down when the Fed keeps raising prices? But I think it means interest rates. So we've talked about housing recently, but you know, with rates rising, last week we talked about how there was evidence of the market cooling. Any new thoughts or anything that's changed since then?
We got one more bad data point. New home sales this week were once again, abysmal.
Yep.
And yeah, it doesn't look great for the housing market right now, particularly in certain markets. I know like Phoenix has been called out as a very weak market. Austin was starting to weaken quite a bit. But again, we need to like kind of baseline set. We need to level set here with like pre-pandemic, we're still well above pre-pandemic housing prices. So there's a big debate over, are we just going to see a normalization? Like our price is going to cool off and kind of get us back to like pre-pandemic trend? Or are we going to see an overshoot and, we're going to see a housing market deep correction like we did in 08, 09? Mm-hmm. I've been in the camp that I think we'll see an environment that's not as bad as 08, 09, but I can't rule it out at this point. Like the velocity of the cooling is certainly significant, and we're about to go into a seasonally weak period for housing in the U.S. It's very seasonal. Housing market tends to be very low transaction volume as we head into like the holiday time period, the late parts of the year. So prices can also move down significantly on that because the people that do need to transact in those environments have less options. You have some of the iBuyers, like I know Open Door's been aggressively trying to get rid of some of the homes in their portfolio. They're still buying, though. They're still buying pretty aggressively, but they've adjusted the prices at which they're buying to try to minimize any hits that they're going to take from home price declines.
I think Redfin came out and said the percentage or the net number of houses with price drops is like highest it's been in several years. So
Yep.
that's kind of a good sign. I mean, we needed a cooling effect.
Yeah. My guess is it probably does overshoot a little bit. Maybe we get down to, 2020 prices, 2019 prices again. It wouldn't be the end of the world. It would be fine. Most people would still have quite a bit of equity in their homes. The X factor, like our questionnaire mentioned, is interest rates. How aggressive is the Fed going to be? I think we all pretty much believe, or not, I shouldn't say that. I think we believe, Nikki and I believe that there's an upper limit that they can get to. Even if inflation's at 8 or 9, I can't see them taking interest rates to 6 or 7, just because of the level of government debt, what it would do to the housing market, mortgage rates, corporate debt, all that.
Yep. All right. Last question, then we'll wrap it up. I know we've been going for quite a while. How is post-pandemic travel? And have you seen any increase in crypto payment availability?
Travel is crazy.
Yeah, travel is off the chain right now. Like Europe is packed,
So
Asia's
busy.
been packed.
So expensive.
Yep. The prices here in Bali are for like short-term rentals are double what we saw in 2019. Minimum, sometimes triple.
I figured out what I was trying to ask with the Ethereum. I was trying to figure out how much you have to stake. That's what it was.
Okay, cool. We'll do a class on that. Have we seen any increase in crypto payment availability? No, but one thing I've seen here locally is there are a few crypto spots popping up.
There's a crypto like cafe.
Yeah.
And a crypto exchange, and I see them riding around on the motorbikes with the crypto ads.
Yeah. So there's definitely movement and growth. Is there mass like payment acceptance? Not so much. It's mostly, cash and credit cards have actually made a big increase here in Bali. But as far as like, seeing QR codes everywhere for Bitcoin, I'm not seeing that yet.
Yeah.
No.
Yeah. Same in Europe, I would say, from what I saw this summer. Actually increased acceptance of credit cards. They had pretty good acceptance there. But I think the pandemic also accelerated it there. There's more small businesses that have terminals and things like that. But can't remember seeing many places where they were advertising like crypto payments for local goods and services.
Yep. All right. We'll go ahead and wrap it up with this survey that I just sent out. I said, what lens do you see Bitcoin through the most? Hodler, investor, trader, or user? Hodler is 50%. So, and granted, I just sent this out a couple hours ago, so there's not a ton of responses yet, but this is probably pretty accurate. About half of people are basically hodling Bitcoin. Excuse me, about 30% said they're an investor. A little over 15% said trader, and only 3% said user. So most people view themselves as holding Bitcoin.
It's not a currency, basically.
Yeah.
People aren't actually using it.
Right.
Yeah.
So the big thing is, store of wealth versus practical use and things like that. I just thought this was interesting. There's a few things we could take away from this. One, I think people should, nobody should do anything. But the way that I think about this is I'm a little bit of all of these, right? I hodl, I invest, I trade, and I use.
It's a choose your own adventure.
It really is. Yeah.
I mean, I'm definitely more of a hodler in the crypto side, but I do think one of my theories is that like crypto will be and seems to be more prominent in online ecosystems and online payment ecosystems rather than like being used as a currency alternative in like real life brick and mortar. It seems like things like Ethereum, for instance, NFTs, maybe smart contracts, maybe STOs, maybe online, metaverse ecosystems, online stuff, right? Or maybe even some e-commerce stuff, more so than displacing what we already have, at least for now.
Yeah, it'll be like not a direct competitor, but almost like a side use rail, if you will. Like, yeah, I see that. All right, guys, let's go ahead and wrap it up there. Before we do, though, just wanted to mention we do have a promo code for the wealth building community at the Skill Incubator. If you go to wetalkmoney.com/community, you can get 50% off either your first month or your first quarter. Just use the code BALI22, so BALI22.
All lowercase.
All lowercase. And
come join us.
If you're not part of the community, check that out. We'll leave that code up for about a week. And you can come in and chat with us in our Discord group, get our alerts, our live classes every week. And that's what that's about. So we'd love to have you in there. I know a lot of you guys are already in there. Also, subscribe to the new channel if you haven't done so. It's just youtube.com/We Talk Money. And all the full episodes will be over there. And we'll link all of our individual channels up where we'll start posting just little clips here and there. And yeah, anything else you guys want to talk about before we sign off?
Don't forget to check out Trav's Stocks and Coffee Pod.
Thank you.
Yeah.
Yeah. Stocks and coffee. Yeah. Throwing a lot out there. I mean, We Talk Money's the main course.
But come join us in the community because that's where we're all at every day.
Yeah.
Yep.
Yeah.
All right. Well, thanks for joining us, guys. And we'll see you next time. Take care.
Cheers.